people are naturally gravitated to wanting to be a really good trader. They want to be active. I mean, deep down, it's what we all want to be. I mean, there's like this feeling to it, right? But the reality is if you get too active, it can do a lot of damage. And I like to look at volatility in the stock market as almost like, those bluey purple bug zapper lights. When there's volatility in the market, all the bugs go to the light, and when they touch it, they get zapped and they die. So that's what happens when we get volatility in the markets. People get attracted to the movements. They like, oh, this is going to be amazing. And most people are emotional. They're emotionally driven. So they end up doing kind of the wrong thing.
So welcome to One Down with Chris Vermeulen. We'll talk about his trading and investing framework. A few things also on his side that is quite interesting to hear about and to talk with you, Chris. So welcome on the podcast. Good to have you here.
Hey, thanks for having me. It's a pleasure to be here.
Awesome. So I want to start with kind of introduce yourself. Tell people more about kind of who you are and what you do these days.
Sure. Yeah. So I'm based up in Canada, just north of Toronto, and I've been really into the stock market since 1997. I got caught up in it in high school, believe it or not, in my finance class. It was our school or our classroom versus other schools. We were all given $100,000. Which class can make the most money in a semester? And we made like $180,000, something like that. And that was what got me hooked on the stock market. I was like, wow, I don't need a job. I'm just going to open the newspaper. Back then, I don't even look at the newspaper, but back then it was like pages of all the ticker symbols. And we would literally just pick some stocks. And in a semester, we made a fortune. And I was like, that is what I want to do. And it wasn't long after that, my dad actually got a little booklet from Larry Williams on how to trade futures. And I read it. It was the ultimate marketing book. And I was like, I want to trade futures. I want to trade stocks. This is what I want to do. And so I really just started in 1997. I just dove in with both feet, learned everything I could, read books, opened an E-Trade account. And really, I've been trading ever since. I ended up making enough through college to pay for my last year of college. I found my sweet spot, which we can talk about as we go through here. So I evolved from trading fundamentals and stocks to now I'm just a pure 100% technical trader. I only follow price. I could care less about the news and the Fed and the fundamentals of companies. And I kind of just found my sweet spot in the markets in terms of how can I make the most money with the least amount of trading and have the lowest amount of risk. And so that you really have time to live life and do other things. I'm an inventor. I run multiple other businesses. Trading doesn't have to be complicated if you systemize things and have the proper expectations from the market, which most people always think it's huge, fast returns, but that's not the reality of the markets. If you're going for that, you're probably destined for failure. There's a lot of studies that show, 97% of active traders over a 300-day window, even during a bull market, lose money. So the more you trade, the more likely you are to lose. Trading is way harder than people think. And it's a business. You have to be good. It's like a pro poker player, pro any player. You can't just jump into the major leagues and think you're going to do well. So I've been through the ringer. I've blown up 3 accounts. I've had to learn, and I found what asset classes that I like to trade that move at my speed. And it really caters towards investors. Whoever has quite a bit of wealth and they want to protect it and they want to grow it consistently. That is where I fit in. It's all about having a good lifestyle and growing your entire account with very little effort. It's not about a lot of trading or swinging for the fences. It is a kind of a slow way to trade, but it actually outperforms the market dramatically. I mean, we're crushing the NASDAQ. We beat most other strategies, which is what shocks people. Because as soon as I say we're consistent or we're conservative, they think, oh, you have no returns. But it's the exact opposite. If you avoid losses, you don't need to swing for the fences because you don't have to counter these losses that you've taken. So, we can touch on how we go about doing that in this talk.
Yeah, we'll definitely have to go on that topic in detail in a few seconds. But I got to ask you first, how did you go from, you learned trading in 1997, how did you go from there to actually being able to make money with it? Because it's one thing to learn and have fun with it, but how did you kind of make it work for you?
Yeah, so, it's a huge process. The reality is I think it takes decades to become a very good, a consistent trader, an investor who knows how to do things properly. You really have to switch gears from thinking you want to be a trader and trading a lot to managing your position and risk. So a lot of people don't put any thought into their position sizing. They don't think about following a system of using stops and targets and scaling out of winners and moving, protecting your capital. Once, I think you need to almost blow up your account a couple times or have some very bad experiences for you to hit bottom and be like, listen, either I need to change or I need to stop trading, because, it's usually people hit that threshold. And I think the big turning point was for me is I got out of college and I got into a factory job, and I was like, well, I don't like actually working. And so I literally started just trading and learning to trade. And I eventually, my goal was, as I came across a website when I was in college, and the guy was selling his trading signals. So he would trade and share them. And I was like, well, that's what I want to do. I want to just learn to trade. And then if I can share my trades with others, we can just kind of go that direction. And, you learn a lot by teaching others. You really start to really nail things down, right? And so, of course, I wasn't really teaching others at that point because I was still totally green and learning. But that's the process everyone has to go through. And through the process, I just eventually refined things down, and we had a big community, a group of us, and we all just kind of learned the hard way what not to do in the markets. And eventually I had a big enough trading account that I could start earning enough money that I didn't need to have a normal job. And it's just a long road to figuring out how to become that trader that you want to be. Like, how active do you want to be? Do you want to still have a job and trade or invest on the side, or do you want to have your living from, trading and investing? It was just kind of managing risk and positions was the big thing, really, is if you do that, if you can stop yourself from having losses, then you don't have to have big returns to counter your losses. You just have to be consistently pulling money out of this market. So I know a lot of active traders who, they can pound out a 20, 30, 40% return one year, but they also have years where they lost 20, 25% or more. And it's the same as the passive investor who has the buy and hold diversified portfolio. They have really good trades doing well, but they have really crappy ones because they're spread across every asset. And so your really good ones get neutralized by your bad ones, and you end up with a very average return, 4 to 8%, which to me isn't the greatest. I mean, we can do 2-3 times that without the volatility. And so that's just where my focus is how can I make the most and live life. I like to do a lot of different stuff. I'm a surfer, kiteboarder. I invent products. I run different businesses, and I like to do a lot of different stuff. I get bored. So I want to be creative and keep busy with new problems.
So what's your kind of trading style these days? What's the thing you focus on in trading?
So I mostly focus on trading ETFs. Specifically, I really like the most liquid assets. So I like the trading the NASDAQ, like the index ETFs, the long-term treasury bonds. So like SPY, QQQ, TLT, the US dollar index, whether it's the long or the inverse, doesn't matter which way the dollar is going, we can profit from those trends. And I use a strategy that I call asset revesting. It's kind of right in the middle of what everyone does. I mean, pretty much the whole world is either an active trader or they're a passive investor. Both of them are on the extreme fringes. And if you do anything to the extreme, it can work out very well, or it can be a very, very rough ride. And so my strategy happens to be kind of right in between those. And I mean, statistically, trading is a rotating door for most traders. They get in, they think they need to trade a lot, which isn't the case. It's proven that almost the more you trade, the more likely you are to lose. They always think they need to be in positions, which is completely wrong. There's sometimes cash or sitting on the sidelines is the best position, whether you're an active trader or even a passive investor. There's times when the markets aren't crystal clear, and people are naturally gravitated to wanting to be a really good trader. They want to be active. I mean, deep down, it's what we all want to be. I mean, there's like this feeling to it, right? But the reality is if you get too active, it can do a lot of damage. And I like to look at volatility in the stock market as almost like, those bluey purple bug zapper lights. When there's volatility in the market, all the bugs go to the light, and when they touch it, they get zapped and they die. So that's what happens when we get volatility in the markets. People get attracted to the movements. They like, oh, this is going to be amazing. And most people are emotional. They're emotionally driven. So they end up doing kind of the wrong thing. A lot of people, when we get volatility, they actually jump into like 2 times, 3 times leveraged ETFs. They get into futures or options and they want to take advantage of the volatility. The way that I do things, I'm like, when things get actually crazy, we actually step back and we move to slower moving assets. And so we do really what I do is the opposite of what most other traders do. We're always just kind of, taking the other side of most people's positions. When people are emotional, we're actually very in control. We can see the markets. We can see how it's living and breathing. I've actually created some indicators. We can see the emotions in the market, the panic, the fear. And so I talk about it even with my followers almost every morning. We're like, holy, everybody's like buying today, or everyone is panicking. We can see it in the volume flows, where they're moving to. And when we know what they're feeling and there's going to be a huge gap up or a huge gap down, we get to sit back and be like, oh, everybody is going to panic. It's going to be an amazing opportunity, and we can take advantage of these. So it's a great opportunity, the markets, if you can disconnect yourself from the emotional side and be a very logical trader, have rules and systems to say, okay, this is what's happening. Even though, the markets might be moving big and you could be panicking, we still need to disconnect and be like, okay, even though I feel like this and so does everybody else, we need to do this. And that's where people kind of go wrong is, if you get too emotional, your brain takes over and you totally lose control. But if you can identify it and have a strategy saying every time this happens or we get this, we need to go and do this, then you can front run that emotions getting too high where you lose control.
So when you say you look primarily at price for your decisions, what does that mean exactly? Like, what are some things you look at to take trades or get out of trades possibly?
Sure, yeah. So I look at a lot of different things. So as you know, almost everything in the financial world is connected in some way. All the markets are when one thing's moving, something else is going down, and vice versa. Money flows from risky assets into defensive, like utilities or gold, which are more of a protective play. So we look at what's going on, where the money is flowing in terms of different assets. So is money flowing to growth stocks and technology, or are they flowing into utilities and gold potentially? Are they nervous? We look at cycle analysis. I love cycles. I think there's a lot of active waves in the market that we trade. I'd like to look at volatility and fear in the markets. We can see how much people are just hitting the sell button, hitting the bid. Just they don't care what price they get. They just want out. Or how many people are just buying in. They don't care what price they get. They're just hitting the buy button and getting a market fill. So we can see all these things unfolding. And of course, we also use moving averages. We want to just know the trend. I mean, obviously, the big money, consistent money is made, I think, during trending times. And if we put all these things together, we can see a great big momentum movement of money flowing into the right assets, the right categories of stocks. We can say, hey, this trend that is just starting has got a lot of momentum behind it. It's got big money. We want to move into it. That's when my technicals say, okay, everything meets the criteria. This could be a strong move. We move in, we ride it up. And then eventually we can see also when things are getting weaker. And so I like to look at the markets like the ocean. A bull market is like a rising tide. It lifts all boats. When we're in a bull market, it lifts all stocks. If the market is going down, you don't really want to hold stocks. You want to be in a different non-correlated asset that can go up, or you want to play an inverse ETF to profit from falling prices. And think of it, if you keep thinking of it as the ocean, like I love the water. I'm a surfer, so think of you walking down the beach somewhere down by an ocean. You see all the surfers out there just past the break. That's what I'm doing. I'm literally just sitting out there waiting for the next clean set of waves. And I look at a group of assets, and every time that set of wave comes, I can look and see, okay, well, which one do I want to catch? First wave, second wave, third wave. Is it the indexes? Is it bonds? Is it currencies? Is it a sector? And then we can hop on it. And when you have a crystal clean movement coming, a strong momentum wave, you can hop on, ride that trend, trim off profits, move your stops up. It's all about managing those positions. And because it's a clean wave, you also know when it's starting to break and when you need to carve out and be like, okay, this one's done. I don't need to go right up into the beach and crash. And so that's the nice thing about trading these waves. And My strategy only has about 5 to 12 trades a year. So we're just waiting for some of these sets to roll through on a monthly basis. We don't trade the daily chop, all that daily noise, those big swings. Big money can be made in those, but you have to be a very active trader. And I don't want trading to be or investing to be a job. I want it to be something that is very kind of passive and generate returns and income without being glued to a screen all day. I've done the day trading. I've done scalping. I've done every style of trading from futures, options, Forex. My sweet spot is it's kind of passive investing. It's just active investing. And I can go do a lot of other things because we only have, one trade a month, or every couple months we have a trade, which is great.
So when you look at these waves in the market, is it based on like a certain asset, or is it based on like a certain group of asset? How do you define these kind of waves in the market?
Yeah, so we watch each asset, and then of course we look at each one has their own group of intermarket like analysis underneath. So if we're looking at the stock market and we're seeing a new momentum wave coming, we'll look at all the things that are directly connected. That we look there, seeing if money's flowing into stocks. If stocks aren't favorable and we've got a sideways market or a downtrend, then we'll look down to bonds or a different asset, and we'll look at that asset and all of its correlated assets. And we'll be like, okay, is money flowing to this wave? Like, is money flowing in here or not? So again, it's the same thing. We're still looking at just where the money's flowing between the different assets. Each asset has a few different core different markets that tell us if money's flowing into a defensive play or an aggressive play. So they still use kind of the same theory. We're still looking at, is the trend moving up on like the 20-day moving average or the 50-day or the 5-day? But we need to see the money flowing in all those related little assets down below. Yeah.
So one thing you mentioned is you can kind of pick your favorite instruments and kind of trade that. So someone could go only with Forex, or they could go with other like only instrument, maybe only crypto, for example. How would you do the same thing there, or would it be like a different process to go through?
So the way that we do it is like I use an asset hierarchy, I call it. So think at the top of your list. Say you've got like 5 assets that you like. So at the top, we always put the most volatile asset. So for me, it will be like the SPY or the QQQ. The U.S. equities to me it's the most liquid and has a lot of volatility. So there's a lot of opportunity there. But the next one down, for example, could be TLT. It has about half of the volatility of the stock market. So as we go down our list, they're actually going to be slower and slower moving assets. So if bonds are half the movement of the indexes, and then we go to the US dollar index, it's actually half the movement of the bond market. And so what happens is when the stock market's not favorable, we go down to the next asset. And if it has a favorable buy signal, we can move into it. If not, we go to the next one down. And that is kind of how we look at it. Now, they all need to have like no correlation to each other. They really shouldn't be connected. You want them to all be able to go in whichever direction they want at any time. And that's what gives us these opportunities. A lot of people will say, oh, I'm going to buy gold now. And then they buy like silver or they buy miners. They're all the same play. We need to actually change asset classes so they're not the same asset, because all stocks or all precious metals generally go up and down together. So we really want to if stocks aren't favorable, we don't want anything to do with stocks. We want to move to bonds or a currency or even just a cash position that pays us a monthly dividend for sitting in cash. There's an ETF, BIL is the symbol, and it just pays us a daily interest on our money. And so when we can step aside when the markets are collapsing and still earn, 1/3% every month for doing nothing but protecting our capital until a nice new set of waves rolls through. And that's where people it really bends people's minds. People do not like to sit in cash. They're like, I'm sitting here. We got inflation and there's sectors and stocks popping and dropping. They have FOMO. They're like, we're missing out. Everybody's making the money. I'm like, it's not about trying to catch every move in the market. It's about protecting our capital, number one, and then making sure that we ride up the next wave. And just people always have this FOMO feeling that if something's big moving, you should catch it. But that's not really the case. I mean, if you're chasing moves, trying to pick tops or bottoms, you're destined to fail. It's just I wouldn't say it's the wrong mindset. It's just the wrong expectations. If you're going to be managing your positions and protecting your capital. You're never going to buy at the bottom because you're not picking a bottom. You're never going to get out at the top. We always see like an asset, it'll be going down in price, it'll turn around, start to come up for a little while. The technicals finally say, okay, it is officially now in an uptrend. We're nowhere near the bottom. We get in, it rallies up, and eventually it tops out and loses momentum and starts to come down, and that's when we get out. So we're always in after it's bottomed, and we're always out just after it's top. And we just catch that middle safe section. But people are always like, well, we got in late, or we got out late. I'm like, no, we're actually just trying to catch the middle, the perfect part of these waves with low risk. And as soon as the momentum has started or ended, we're changing our position. So that's there's a mind shift and expectations people need. If you think you can catch tops and bottoms, you're really not going to make it.
So once you get into a position, are you going to hold it until the end of the wave, or are you going to maybe add to it or take off some profits over time?
Yeah, good question. So we actually scale out of positions as we hit certain percentage thresholds. Every asset has its different thresholds because they all move different amounts. They have different volatility. So we will scale out of a trade as it's moving up, lock in some partial profits. We'll move our stop to our entry price, which is the best feeling ever because now you're in a free trade. You've made money. If one of these trades, which they can last sometimes 6, 7, 8 months, we just ride those trades up for big gains. If it rolls over, well, we get out and we make a small profit, and we can move to a different asset as the market starts to collapse. We can move somewhere else. And that's why we have this ratcheting feeling with our account. I call my strategy CGS, which stands for consistent growth strategy. And literally our account is pretty much moving sideways because we're in cash waiting for a wave. We're floating on the horizon there. And then when one comes, we go up for a bit, and then we were waiting back in cash and we go up. So it's just a stair-stepping action up to the upside, trade after trade. And it is a very, it's a pretty incredible feeling when you keep going up, especially when the markets are free falling. Like COVID was a huge opportunity. 2022, we made some great money. And, most people lost their shirts and went through an emotional roller coaster, and we just walked through it like we were just walking, it was just super easy to do.
It must be hard to adjust people's expectations of they want to trade every day, they want to take like mini trades, and they want to get in and out. How do you kind of adjust these expectations of people to kind of sit back and just kind of focus on the longer term?
That's the hard part. That is the really difficult part. And we have this all the time. Even though we keep hitting new all-time highs like every month or two with our accounts, we just keep growing and growing. People still cancel. They're like, it's not active enough. I want more trades. I mean, they have to be open to the mindset that they're willing to do something different to make more money. But people chasing trades, like so many people just will join services that just spit out trades all the time. They'll give out trading tips and trading signals, but do they really manage those positions? Do they tell you how much of your portfolio to put in? And people are great at blowing up trades. I can give out a trade, for example, and a few days later we hit a profit target, just like we actually did last week. And subscribers will be like, we just got into it. It's making money. Why do we want to get out? I'm going to hold on to it. I mean, that doesn't work in the long run. It's going to end up catching them. And then, of course, if we have a trailing stop or a stop hit just because the market didn't work out, I'll be like, your position should have been closed. Your stop order should be hit. We're back to cash. We're waiting for a new signal. People will write me. They're like, well, yesterday you liked it and I don't want to take a loss. I'll wait till it comes back and then I'll get out. I mean, it's people just have a great way of being on the wrong side and getting stuck in these terrible, it's not a terrible trade until you hold on to it until it gets really bad. And we get out very quickly. If we're wrong, we move on. It's not about trying to be right all the time. I have no problems being proven wrong and stepping aside going, thank God we're out of that trade. Like, you just have to accept it. Losing trades is part of the game. But you can't change a lot of people's minds. I mean, it takes a long time for people to see this. And I have people all the time saying, I've been following you for years. I see what you're doing. They become subscribers. They follow my work. And more or less, they're like, it took me a long time to figure this out. And they see us keep growing and growing, and they keep losing money with our signals. And finally, they're like, I get it. I think I get it. I have to switch. I have to go to a money protection mode, and the gains will come on their own versus swinging for gains and taking some bad hits and not managing positions correctly.
That's a good point. And the other thing you mentioned a lot is like risk management. A lot of people are like might want to put all the money into like this one trade, this one position. How do you kind of deal with risk management to make sure you don't lose too much, or you kind of you can stay in the game long term?
Yeah, a lot of people do that. I mean, I talk to a lot of people who love a specific asset class. Like a lot of people love precious metals. They are loaded with gold, silver miners, or they love uranium stocks, or Apple or Tesla, whatever it is. I mean, there's such strong movements. How do we deal with it? Well, we move all of our money into one asset at a time. So we could be 100% into the stock indexes. And then when, of course, it's not favorable, we move out. But we have very tight stops. I mean, our stops will range between 1.5% to about 5.5% on the. If we're wrong, that's the most we can take. So we have very, very tight levels. Most of the time, we'll have a trend reversal before a stop is ever hit. So we have a very, very tight kind of risk bracket there. I mean, our average, our biggest drawdown since the 2007 market top is less than 6%. And that's on our entire account. And, you know, we're averaging about 15% return a year, which is a pretty decent return for doing very little effort and watching our accounts keep going up. So it's all about having tight stops, rules in place. A lot of what people don't realize is during a falling market, you need a different strategy. You can't just keep using the same strategy. You have to change. A falling market is much more difficult to trade. It's fast moving, but people don't realize everything kind of changes in falling prices or trading inverse ETFs. And that's the problem. People get stuck into doing the same thing, even though the market conditions change. As volatility changes, you've got to adjust your targets and your stops. You've got to let the market breathe. You might need to take a smaller position and increase your your stop level so it has more wiggle room. So you have to live and breathe. The market is always changing. And so many people they're like, I got to put 10 grand into this trade and 5 grand in this one. And they have no rhyme or reason other than those are nice square numbers to use. But they don't realize if they take a 15% hit on one of those, it's going to do a lot of damage to their account. And that's where people get caught up, is they just don't manage risk or positions. And the reality is, if you just manage your risk and your position sizing, all of the gains come. The rest of trading becomes actually very simple because you're following the trend. You're not going to take a big hit, and you don't have to swing and hunt for trades every day or every week. You're not out there looking for the big mover. You're just really, I focus on catching the tides and the waves in the overall stock market itself versus looking for individual stocks popping and dropping all over the place. I like slower moving things that I can move a large amount of capital into, grow my capital, step aside when it's not. I don't need all these little, racehorses, taking off and dropping and all over the place. I've done that. That's not my style anymore. I want to protect capital, grow it in a way that I find is very low stress.
So tell me more about these reversals, because people have been calling out the market crash since like the past 80 years. They know it's the top. They know it's going to crash. What makes you know that you have to change or it's going to get into like reversal mode?
Yeah, I mean, the reality is no one ever knows. And a lot of people are always like, oh, I called this, I called that. I mean, no one knows until the trend confirms to the downside, until we're already well underway. We're like, okay, that was a top. We are in a new major downtrend. We can see things coming. I do think we're coming up to a major market top. I think we're going to see a huge correction, stage 4 decline. I think it's going to be a 30 to 50% correction from where we are. And that's what I think is going to happen over the next 6-8 months. But really, it doesn't matter what I think because we follow the markets. And this is one thing where people always get confused, because I'll do a lot of other interviews and talk about the markets. People always like, well, what are you forecasting? What's your prediction? And I'll be like, well, I'm really bearish. I think we've got very difficult times ahead. But we are long the markets right now because the trend is up and we follow price. So just make sure you don't follow my opinion. You actually follow price, because only price pays, not our opinions, not the fundamentals. The market doesn't care what a company's earnings are or what you think or feel. if it's going up, you want to be long. If it's going down, you want to be, on the sidelines or doing something that profits from falling prices.
Is there anything we didn't talk about or we didn't touch on you want to kind of talk about a little bit or mention?
I think we covered a lot of really good things. I mean, when I was younger, I think maybe to touch on how I got into the risk side of things and how it worked out really well was when I was 16 years old, I ended up getting my pilot's license. And I remember showing up at the airport. My mom dropped me off because I couldn't drive a car. And I remember my instructor saying, "Hey, Chris, hop in the plane today. You're going solo. You're going to be a pilot today." And I remember, getting in the plane, taking off, and the ground's getting smaller and the runways disappeared. And I remember my emotions flying really, really high. And I was like singing songs. I was talking to myself like a cartoon character. I was like completely like laughing, crying. I was like, I couldn't believe it. It was a dream come true. But I was like, I have to get this thing down without crashing and blowing up into pieces. And I remember once I got it, I started to like panic. I'm like, I need to get into this circuit to pass this test. And I looked down to my leg, which my checklist was there. And I had done this 1,000 times before. And as I worked down my checklist, before I know it, I'm in the circuit, I'm on final, I land, I'm taxiing off the runway. My instructor's like, his name is Nelson. He's like, "Hey, Chris, well done." He's like, "You are now a pilot." And I remember just the feeling of that, of being 16 years old going, wow, I was super emotional. I couldn't control myself up there. And because I had a system in place, I had a strategy that I had to trust, that all I had to do was put my emotions aside, follow my rules, and I will be safely on the ground. That was when it really hit me. And most traders get like I do in the plane. They completely lose their mind. They get super emotional and they start doing the wrong things because they can't realize that their emotions are in control. They need to say, okay, I feel like this. I hate this feeling, but this is what always happens when I get to this situation. I need to put it aside and I need to follow my rules and just bite the bullet, hit the button, open the trade, close the trade, whatever it is, follow that system. And that was when I got my license just as I got hooked onto the stock market when I was 16. I was in college, same semester. And so as soon as I had that, I was like, okay, I need to create rules on how I want to trade these stocks. And that's where I really learned about systemizing things right out of the gate. And that was my first lesson. A couple of years later, my parents were entrepreneurs, and my dad retired in his 40s, but he wanted to get back into the game. He's an entrepreneur. He loves that stuff, but he got in with the wrong group of people who literally took the money and vanished. And we went from being retired, having a great lifestyle as a kid, to we had our clothes and furniture. We went bankrupt, lost absolutely everything. And I remember my dad ended up, I heard my mom screaming one morning. I can hear footsteps. I hear my sister screaming, and I run in and I see my dad having seizures on the floor because of the stress of being healthy and financially super stable to losing it all, losing friendships, all kinds of different things through investors losing money. I mean, I saw how I thought my dad was dying. We all did. We were on the phone with, the ambulance. And I learned at that phase my dad's fine now, but after that, I learned financial stress can literally kill you. And in 2008, 2009, there was over 6,500 people who committed suicide that was directly linked to falling equity prices. And I think we're going into one of those big financial resets again, sometime late this year or next year. And so that is why I'm kind of trying to help as many people now is like, listen, you can have everything you want and be healthy and have all the money you need, and you can lose it. And that's why I'm so adamant about having systems and protecting your capital. If you protect your capital, you can protect your lifestyle, your health, and those are the most important things. So that's where everything kind of came from, is learning that it can almost kill you or it can kill you. Your emotions can take over. So that's where everything all this happened when I was really young, and I've been in this capital preservation first mode and then grow my money in the most conservative way. And that's where I came to this asset revesting strategy, which is like, how can I make the most money with taking the least amount of risk and diversifying into different businesses and things like that, real estate, you name it. I've got my hands in a lot of different businesses, but you have to protect your capital.
That's a really good point. And also the fact that COVID brought a lot of new people to trading. They don't want to trade every day and stuff, but trading isn't necessarily for everyone. Like you cannot just trade all day and like have a full-time job and stuff. It's just not for everyone in any case. So be able to do it right without spending too much time on it is definitely a good key that people have to learn and go through.
Yep. Right on.
Good point. So where can people connect with you or find out more about your work after this podcast?
Sure. Well, they can go to assetrevesting.com if they want. And from there, they can opt into a list. They can download an infographic that kind of covers some of the stuff we talked about today. It's pretty neat visualizations of breaking the market down from stages to emotions to the cycles that it moves in, which asset classes perform best during certain times. They can go to assetrevesting.com. They could pick up my book if they really want to learn the details of what I do and how it's done. And people can copy my trades. They can even have it auto traded, or they can learn how to create their own asset hierarchy and trade all the assets that they're passionate about.
Sounds good. I'll put a link below the podcast show notes here in the description of the video. People can check it out directly. And Chris, I appreciate your time. Good advice here, good lessons for sure. You have an amazing story that you shared, so that's awesome. Hopefully people can connect with you and see more what you do and learn from you after.
Hey, thanks for having me. It's a pleasure.